Hello and welcome to Your Stocks in the Mumbai studio. I'm Sonal Bhutra and this is a show where we answer all your individual stock queries. But before we go across to our guests who will be answering your queries, let's just quickly take a look at the markets because it's surging further. 131 points on the Nifty right now. It's at the day's high and the mid-cap index too has turned into green after seeing that bit of a red in the earlier trade. So it was down around 40 points. It has recovered from those levels and it's been a volatile trade for the mid-caps today. Banks are doing well. That is one space which is supporting the Nifty today. Bank Nifty is up around 282 points right now. We have the other names which are supporting the Nifty, the likes of Reliance Industries. That stock is up 2% right now. We have the other names like Ultratech Cement, which is higher in trade today. There's ICICI Bank, Maruti Suzuki. So most of the Nifty components as well supporting the moves that we are seeing on the Nifty today. So let's get going. Joining us today is Rajat Bose of rajatkbose.com and Sharad Avasthi, head PCG research at SMIFS to answer all your queries. Gentlemen, good afternoon. Thank you so much for joining us today. And as always, a lot of interest, a lot of queries that we have received via text, via social media. So let's get started. KS Rao is on the line from Andhra Pradesh. He has made investments in Gujarat Industries Power. Please go ahead, sir. What's your query about the stock? Mr. KS Rao, can you hear us? Okay, all right. Looks like we don't have the line right now, but he has bought 100 shares at 60 rupees. He's making a profit of around 18,000 rupees on Gujarat Industries right now, Gujarat Industries Power right now. Wants to know whether to hold or sell. Sharad, let me come to you first up. A stock which is flat right now but has given decent gains to the viewer. What do you suggest here?
Yeah, I think he should continue to hold, considering the prices at which he has bought, and he's still continuing. I'm assuming he's a good long-term investor. The current capacities are around 1200 megawatt, roughly 50% is on renewable power and 50% from thermal and lignite-based power. As far as lignite-based raw material sourcing is concerned, they already have their mines in place. Most of the power produced has long-term power purchase agreement, so that's not an issue. In addition to that, they are developing some big projects. One 2400 roughly megawatt renewable energy park in Khavda in Gujarat. So I think in addition to that, another 1200 megawatt kind of renewable power is also on the stream, which should start somewhere around December 24. So I think there's a material changes from a 1200 megawatt company to somewhere around, 3 times the current size. The capex is around 6,000 crores on a balance sheet of around 3,500, 4,000 crores. So I think this is a company that could be poised for very handsome growth. The only thing could be that if the capex does get delayed and there could be some hit on the numbers for some time. But since it's a government-owned entity, I don't think there would be much of a problem on that front. Even if there are some delays. And the renewable power, particularly solar, usually is very efficient in terms of the time required to put in the project. So I think most of it would go very easy. So I think this is a good long-term bet. At least I think if you are very conservatively looking at it over the next 2-3 years, it should double from here. So continue to hold. Very conservatively also, it trades at 10-11 times. I think with 6,000 crore capex, it is very easily possible that the earnings would more or less double or even be better than that. And if you place a 10 kind of multiple, I think you could be looking at somewhere around 400, 450 on the stock. So I think the long-term investors have very decent upside on the stock.
Okay, decent upside on the stock could double as well from these levels. Rajat, what's your take?
Well, 4th of June, it posted a low of 170, and after that, it clocked a high of 269.40 or something. That is a 100-point rise. But I'm pretty encouraged to give a long-term view because the person is actually sitting on quite a bit of profit. I mean, one can think of booking part profits now. Otherwise, one can continue to hold on. Please put a stop loss below 210 and continue to carry on. Otherwise, at current levels or on a bounce, you can book part profits because this kind of a huge rise is generally followed in the stock for a long consolidation. So that way, some profit booking may be in order. But otherwise, one can continue. But keep a stop loss below 210.
Okay, all right. Stop loss below 210 on Gujarat Industries Power. Let's move on to the next sector, which is buzzing in trade of late. Nimish Nika writes to us from Mumbai, holds 200 shares of IndusInd Bank at 1,600 rupees a share. He's willing to hold the stocks for this year and wants to know whether to hold or sell. Sharad, let me come to you because, of course, private banking names, they are back in focus. Large cap banks, they are doing well. Do you think IndusInd is the right choice amongst all of them? If not, what are the other stocks that the viewer can look at?
No, I don't think IndusInd is a bad choice because if you look at the price to book multiples, it's roughly trading at somewhere around 1.8, 1.9 times price to book. Most of the private sector banks are roughly trading at somewhere around 3 times price to book, whether it's an ICICI or an Axis. Axis might be a bit lesser. But I think at 1.8, 1.9 times, most of the risk seems to be factored in. The GNPA numbers have more or less been steady at around 1.9%. The net NPA is at 0.57, 0.6%. And the retail book has been expanding. The MSME book has been expanding. The bank is thinking about expanding into the other areas also from where growth would be there. So conservatively, you can expect 17-18% kind of advances growth easily happening for these banks. The same would happen for IndusInd, 2-3% here and there. And I don't think there is any credit side risk on this bank's book. So that's another advantage. So even if there is some pullback in terms of the new segments that they are growing and they can grow at a substantially higher rate, and maybe the price to book oscillates to 3.3, around 3 times price to book. But even if we don't consider that, I think what he's saying is he wants to hold for a year. So considering next year's addition, you could expect the book value addition of around 120, 130. If you can extend your horizon, I think you could be looking at 2,000, 2,100. But considering next year, I think you would have another 200 rupee to 250 rupee kind of upside from current levels. So roughly 1750, 1 year target.
Okay, all right. So can hold on to IndusInd Bank from the current space as well. What's your take, Rajat, here? Is this stock looking good chartically, or do you think there are other names that the investor can look at?
Well, first of all, this stock is range bound between 1575 and on the upside and say roughly about 1440. Although it did go down to about 1400 or even lower in the recent past, but generally within that range of 1400 to about 1575, it is oscillating. So when a breakout will happen on the upside, I really don't know because there are no technical signals to that end. Regarding choosing an alternative, I would say that other stocks have actually moved up so much. Say you don't buy HDFC Bank above 1700 or ICICI Bank say above 1100 or 1150. These stocks have already moved up. Had it been those stocks, I would have said at least book part profits. Here, stay put with the stop below 1440.
Okay, all right. That's on IndusInd Bank and the other names possible here as well. Moving on, Ramesh Jain writes to us from Chandigarh. He holds 10 shares of Nika at 140. He wants to know whether to hold or sell. So the quantity is really small here, just 10 shares. So there's a profit of around 340 rupees here. Sharad, new age companies, even the next query is on that one. What do you suggest here?
Yeah, I think it's a good bet if you want to hold very long term. But the next 2-3 years, I think roughly is very well discounted. I think the USP for this could be that Nika is a good idea if you want to hold on to something where you have very good confidence in terms of the products and the type of growth they are looking at growing the fashion business substantially. The retail part also they are looking to grow. But in terms of numbers, we are looking at 25-30% kind of CAGR in the bottom line, in the top line. And the EPS for FY26 is expected to be 1.5. But these things can change very fast. Like 1.5 years ago, we were talking about a 5 rupee kind of earning. So I think even if optimistically I look at it, say they would report 3-4 rupee kind of earning in FY26, I think still the valuations are a bit on the higher side. Someone would be better off betting on a better stock where the valuations are much more comfortable. Within the new age companies, I think maybe Honasa makes the cut better. But I think Nika is good if you can extend your horizon to 4 to 5 years. Maybe 1 or 2 years you'd not get much. And since the quantity is less, I don't know if he's willing to buy more or what is his approach. But unless and until you have a 4 to 5 year horizon, I think Nika would not make much sense at current prices. Comparatively, maybe if within the same basket you want to look at something, Honasa could be a better idea according to me.
Okay, Honasa is a better option than Nika in the same basket. Rajat, what would you suggest in terms of charts right now? What is Nika indicating?
If you look at the monthly chart, it will appear that it is about 50% higher than its all-time low of around 120. But other than that, what I would say is that when you look at the daily chart, it is again range bound, and it is bouncing back every time it tests its 200-day, or rather, most of the time it tests its 200-day moving average, which is around say 165 or so at the moment. So he should continue to hold on, and I suppose even here, if I'm not mistaken, the person is holding only 10 shares. So
Yeah.
nothing much will happen.
I know. The quantity is really small. So unless there are massive moves, or even then, it's just a small quantity to see those massive swings as well. Nimish Kumar is writing to us from New Delhi. He holds 8 shares of Delivery at 350 rupees a share. He wants to know whether he should hold or exit at current levels. Well, Rajat, again, it's a small quantity here. I know big swings, small swings, not a big matter. But Delivery, how is it looking on the charts?
Which stock it is?
Delivery.
Oh, Delivery. Delivery, it has bounced back from critical support around 360. But again, it is unable to get past the critical resistance around 420 and currently around 400. So I would say that one should get out of this. And if I have to suggest, I would suggest Idea. Idea can actually give a better return given the kind of investment that this man has made. Probably over a period of 1 year, 6 months to 1 year, Idea in percentage terms will give better results than this one.
So you're saying the investor should look at Idea instead of Delivery?
Yeah, Idea instead of Delivery, yes.
Oh, okay, all right. So that's I just wanted to confirm again from absolutely different sectors as well. But take that point, Rajat. How do you look at this stock, Sharad?
I think in the long term, it could be a good story. But if you look at the numbers, I think whatever is conceivable over the next, 2.5 years, roughly you could be looking at very strong growth in the bottom line, basically optimization of resource utilization. That is a prospect that can substantially boost most logistic companies. And most of them are trading at more or less similar sizes. Delivery has a larger fleet, maybe a bit better on the technology side and the type of arrangement that they've done with the partial loads and their own trailers, etc., and how they utilize it. So that could result in a lot of optimization in terms of the numbers they post. And there is a lot of scope in terms of optimizing the fleet, in terms of utilizing it better. That is across the logistics sector. But if you look at most companies, most of them are growing at a very handsome rate. Delivery most probably would have one of the best growth rates in terms of bottom line. But when I look at valuations, even if I consider very optimistic numbers, FY 26, 27, we report somewhere around 8 to 9 rupee kind of earnings. Even then, it's trading at around 40, 45 times, 50 times roughly. So it doesn't really leave much on the table. I think compared to this, I would be happy buying a TVS services. I think there the valuations look much more appealing rather than this, or even a Mahindra Logistic. But in a similar size and a partially new age kind of arrangement, I think TVS does look better than this one comparatively.
Okay, all right. Okay, all right, gentlemen, thank you for that take on these names, but we have to slip into a quick break. When we come back, we have a whole host of stock queries, so we'll answer that on the other side. Stay tuned. Welcome back. You're still tuned in to your stocks on CNBC-TV18. Markets continue to do well. Nifty Bank actually has surged further, and that is supporting Nifty a lot more now. So 0.6% higher there. We're very close to the 23,900 mark now, and that surge is led by Nifty Bank, which is up around 330 points as we speak. And we do have a lot of stock-specific queries as well. So still have with us to answer all your queries, Rajat and Sharad joining us back again. Rajat, let me come to you on this one. Thippiswamy writes to us from Tamil Nadu. He holds 60 shares of Adani Wilmar at 404.65 rupees a share. He's a long-term investor and wants to know whether to hold or sell and what are the long-term prospects of the stock. First, let me come to you, Rajat, and then Sharad, you can give us a sense of the long-term prospects.
Well, Adani Wilmar being an FMCG kind of a stock, you can actually continue to hold on, but as such, it is not showing any kind of signs that would tell us that it will move up immediately. If you allow me, I would like to say something about this small holdings like 10 shares or few shares. These people can actually select, yes, FMCG or those kind of stocks that are regularly in use by people. These kind of stocks actually, even in advanced markets like United States, have given 100 baggers in 30 years. So buying 5 stocks, 10 stocks in companies like Nestle, Hindustan Lever, Britannia and all, and if you can stay put for a long time, you will gain much. But Adani Wilmar, though, belongs to the same category, but this does not have the same pedigree. That's why I would suggest switching into those kind of stocks. By the way, since I've taken Nestle's name, I personally hold some shares in it.
Okay, thank you for the disclaimer. Thank you for the advice there as well, because that is something that would help the investor as well for sure. Sharad, your take on this one?
Yeah, I think there were a lot of surplus capacity post the issue. They had a lot of surplus capacity on the oil part, basically. There have been some abnormal movements in terms of palm oil prices globally in the past post-COVID because of logistic issues and then some issues here and there. But I think gradually now it is settling. They're also looking at diversifying into new products, expanding their reach into more rural and semi-urban areas, even urban areas. So I think all that should play out very well over the next, 3-4 years. In terms of numbers, what are we expecting? We are expecting FY26 an EPS of somewhere around 9 to 10 rupees. And currently, I think it should easily command, with a top line growth of 8 to 10% and a bottom line growth of somewhere around 25 to 30%. I think anything between 30 to 40 times is very easily possible. And I think long term, the underutilized capacity and the expanding distribution reach, new products being launched, all that should add up very well for the company. Yeah, they do not have an established pedigree in the space, but in terms of particularly the oil side of the business, they have a pretty large capacity in place. And I think over the next 3 to 4 years, this would be a very good idea. So initially, what you can look at is a target of around 400, 450 on the stock. But I think this is an idea worth holding because the capacities are in place. It is only the distribution reach enhancement that should substantially aid sales over the next, for a long period of time. I think over the next 3 to 4 years, they would hardly need new capacities. The existing capacity should be enough to support very rapid growth for the company.
Okay, all right. Take that point, Sharad. Let's move on to the next one. Kumar writes to us from New Delhi. Holds 1,100 shares of JK Paper at 450 rupees a share. He's a short-term investor and wants to know the next 1 month target of the stock. This is one stock which has done really well and has been buzzing off late as well. Rajat, 1 month target on the stock?
JK Paper, you said, right?
Yes, that's right.
It has already gone ballistic in a parabolic manner over the last 21 days, I suppose. It posted a low around, say, 346. And I think today itself, it has shown a high of 561. Should one wait, or prudence calls for a profit booking? If I were in his shoes, I would have booked profits.
Oh yes, it has seen a massive move. 3 months already up 66%. So if the suggestion here is that the investors should look at some profit booking. But on the paper sector and JK Paper in general, Sharad, what are the suggestions? Paper pricing rising now? Is the sector seeing an uptick?
Yeah, it has already gone ballistic in a parabolic manner over the last 21 days, I suppose. It has already gone ballistic in a parabolic manner over the last 21 days. And I think today itself, it has shown a high of 561. Should one wait, or prudence calls for a profit booking? If I were in his shoes, I would have booked profits.
Okay, all right. Take that point, Sharad. Let's move on to the next one. Sarvanar Kumar writes to us from New Delhi. Holds 1,100 shares of JK Paper at 450 rupees a share. He's a short-term investor and wants to know
Yeah, I think the best part for the sector is the abnormal valuations that across the board these companies are trading at. Even if you look at JK Paper, next 26, most probably the EPS would be somewhere around 76. Even if you are taking a very conservative approach, I think these companies should trade at 9 to 10 times. The initial hiccup around 7, 8 years ago, or even before that, was that maybe the advent of electronic media and electronic studies will totally remove paper from the scheme of things. But actually, that has not happened, and paper continues to be an important part. They have a 30% market share in the copier segment as well. And I think they have expanded capacities. They are continuously expanding capacities. The balance sheet is robust. I think they should easily get 9 to 10 times. So I'm working with a long-term target of 750, but obviously 1 month is a short span of time. Rajat is a better equipped person to talk about that.
Okay, all right. We take that point. Rajat, one more query, and if I could request you to take it up quickly. It is Nikhil Srivastav writing to us from Bangalore, holds 30 shares of ONGC at 150 rupees a share. Wants to know the future prospects of his holdings. This is one stock which has done well. What are you suggesting? Chartically, how is it looking?
See, if the future is actually 5 years or 10 years, then definitely do hold on to it. Otherwise, it has had a very good run from 180 to about 280 over a period of few months. Early this year, it touched that high, and after that, just like SRF doesn't cross 2800, this one doesn't cross 290. So, if I were to give a suggestion, I would say book part profits or full profits if you want.
Okay, book part profits or full profits on ONGC. Gentlemen, thank you so much for joining us today and taking us through those queries so patiently. That's all we have on the show today, but do remember to email us your queries and we'll address them with our experts. Stay tuned for Closing Bell to take you through the last hour of trade.